Hi everyone, in this video I'm going to answer the question, is 3M stock a buy? You'll get the answer by the end, so stay tuned. I'm going to use my simplified 6-step framework. The first step in my framework looks at customer value, and revenue grew from 29.9 billion for 3M to 35.3 billion in 2021, a modest increase. It's it's got 55,000 products selling in all different parts of the world. So it's doing something right to gain that much business in this many areas. However, if I look at the net promoter score of -6, of course, net promoter scores measure customer loyalty. It needs improvement here. It's in the bottom and it's one of the lower scores of all of the companies that I follow, and I follow a lot of companies. Unit economics is the next step in my framework, and 3M has managed a 48.4% gross profit margin in the last decade, and that's held very consistently around that range. Operating profit margin, meanwhile, averaged 21.7% in that same time. So, really good margins here for 3M. The total addressable market is one of the more important steps in my framework, especially for large companies. I want to know that the company has room to grow and it's not going to hit a ceiling anytime soon. And for 3M, that's not the case. It operates in several large industries, including car care, medical products, dental products, electronic circuits, adhesive, abrasives, and more. So it's got a massive market opportunity. It's not going to hit a ceiling anytime soon. Next step in my framework looks at competition, and 3M competes with General Electric, Honeywell, Corning, and more. Of course, when you're selling that many products in that many countries, you're going to have a lot of competitors. And although competition is tough, rivals have worked to stay disciplined on pricing. This is evidenced by the excellent profit margins that 3M has delivered. So you're not seeing a race to the bottom here for the industries that it operates in. The next step in my framework looks at valuation, and for 3M I looked at the price to earnings ratio on top and price to free cash flow on the bottom. And looking first at the price to earnings of 10.97, it's the lowest it has traded for according to this metric going back before 2014. And looking at the price to free cash flow of 18.6, it's on the lower end of what it has traded for going back to 2014. And in fact, if we look at before the pandemic, the stock had not traded at a valuation lower than that according to price to free cash flow. So at these valuations, the stock is inexpensive. The final step in my framework looks at risks, and the worldwide macroeconomic slowdown, it could cause reduced spending from consumers and businesses alike. This is a risk in the near term for 3M. Also, I note here that inflation is pressuring the company's profit margins and putting them at risk in the near term. It's having to pay higher prices for all of its inputs, and it's having a more difficult time passing along those prices on to consumers. All right, now that I've looked at each step in the framework, let's give 3M a grade here. Customer value, I gave them a B minus because even though they're generating over 30 billion in annual revenue, their low NPS score shows that they need to show some improvement in the customer value proposition. The next one, unit economics, I gave them an A plus for excellent margins. Total addressable market, A plus also, several large product categories. Competition, they get an A because even though they're facing a lot of competition from their rivals, they've shown that they can compete against these big players and do a good job of that, a long history of that kind of excellent performance. And risks, I gave them an A because even though there's some risks in the near term with inflation and potential recession pulling back spending, those are near term risks that should resolve themselves over the next 18 to 24 months. And so I didn't see any longer term risk for the company that is, front and center for them. Finally, valuation, I gave them an A plus. the stock is trading at arguably its cheapest valuation, going all the way back to 2013. So you're getting this stock at a really, really good price right now. Okay, so now that I've looked at each step in my framework, let's go ahead and answer the question, is 3M stock a buy right now? Yes, it is. 3M stock is a buy right now. The relatively cheap valuation of the stock, combined with excellent profit margins, long history of competing effectively against its rivals, sways me to recommend this excellent stock as a buy right now. Investors can go ahead and buy this stock, whether you're looking at it just as a, for something to grow capital gains, or it also pays a very nice dividend yield. You can buy 3M as a very nice dividend stock and hold it for 5, 10, 15 years, and I would be very happy owning this stock for that amount of time. So this is one of the stocks that I would recommend as a buy. Okay, so that's all I've got for this video. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.